Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It is June 24th. This will be our chart lesson for the day, and really strong downtrend today. We had the original two-tiered channel working down. We had a break, a move to a new low, and then we corrected for probably an hour here, and that's generally what you expect if the trend's going to continue. And notice we didn't really bounce much, and so that's a little bit of a tell that hey, the market can't gain any momentum, so it's a possibility we could continue lower, and that is exactly what happened. And then we went into this brown channel, two-tiered channel, which lasted until about 11:30 or so, and then we got the break. We still tried to go for a new low. We never could get it. We just went sideways the rest of the day. So that's the way I saw it. Of course, really you want to trade the smaller trend channels and trend little ranges and congestion areas that are within that. You did get a few setups off this main trend line, not many, and you didn't get many off. You didn't really get many off this one either. So you really have to narrow down into the smaller stuff on a day like this. I mean, it's great when it keeps coming back to the trend line. It makes it real easy. But that just didn't happen today very often. So on the bigger pattern, so you had to trade the smaller patterns. And some of the moves were really strong too. And you had to be patient this morning because we didn't really get our first really solid setup till 9 o'clock almost. And so I guarantee there was some of you that forced some trades in here and probably lost trying to force a trade. And sometimes that's just the way it works. You just have to be patient and wait. And even though the market's moving really strongly, you just don't get any setups. And then suddenly you get a whole bunch of them here all the way down. So, of course, you wanted to measure that first leg. You can see that first leg, and we'll look for the measured move, which is what that blue line is right there. It's the reason that's there, just at the bottom of that. And then, of course, when this leg completed, we'd look for another leg down. And you might actually measure this one both ways, so you'd have two targets there. And notice that we really even went a little further than that, but that pretty much gave you a clear target right there. The shorter one would have brought you up a little bit short. We actually did bounce there a little bit too, but this one came up a tad short. We found some support there, and then this one went up a tad long. So, but those would have given you great targets to shoot for. Either one of them would have worked out. But let me back out, and we'll go through the trades. Got to get way out. 7 o'clock came right in here somewhere. I can't remember exactly where it was. One of these bars in here. Yeah, it looks like it was this inside bar right here. So the big picture is still down here. We did have a little bit of an overshoot, so you might expect a break. So based on that, if you got a good setup to go long here, you might take it. But I never really saw, I mean, there's just not a really good setup on mine. You got a first entry here. It's not really back to the trend line. You get a second entry here. It's a real bearish bar. You get another two-legged correction here. Again, no signal bar, and you just don't really get a good setup. And really, by now, you're almost thinking short again. And so there's one possibility, and this is close to being red. I mean, you really could count that as a second entry. Technically, we made a little bit of a two-bar matching low right there. As you can see that right there, those two bars are matching. So you could count that as a new low, basically. And so there's a first entry, second entry, and that's right off the key entry point. You may take it anyway just because it's such a bearish bar right off the key entry point. But this trend channel is still in play, and so you got to be a little careful because it might do just what it did right here and bounce on you. But either way, that would have worked. And there's a couple of different ways, like I said, to look at that. You could have counted it as a second entry. You could have looked at it as just a turn off the key entry point. And so it's a really good signal bar. So, and there is the key would be, do you have enough room back to this trend line, the EMA, or whatever the next kind of support area would be? And so worked out pretty well, but it bounces again. And then it runs up, and we got our first break, and we had an overshoot, and we broke this a lot further. But notice how you started kind of going sideways. That's a little bit of congestion, and you get a little failed break up there. There's 3 little pushes up, which a lot of times when you see those last 3 pushes that far away from the EMA, it's probably going to at least snap back to the EMA. And that's a nice signal bar, relatively small on top of that. When's the last time we saw a signal bar for a good entry that small? So you may risk that one. It's very low risk entry. Generally you want that lower high, but you don't get that here. So if you didn't take that one, you don't get a chance to enter that. And we do bounce here. And there's another second entry short here, and you might have got tripped up right there. The problem here is this is an inside bar. It is a matching high, but it's right there at the open. You got a little trend line working up. You're looking for prices to try to make another leg down to make this new low. So, and this could be the center of a pattern here. So you just never know what to expect there. If you took that one, you would have got stopped out. But notice your little trend line works up. It finally gets a break, moves to a new high, and you get another chance to go short. Again, you'd probably want to wait on a lower high, which you get here. But this is your signal bar. Those are not matching highs on my chart anyway, and that's too bullish. And you don't want to use an inside bar. Notice how it gets support right there. It ends up going on down, but you don't know that it's going to do that. If this would have broke higher and turned down, I would have liked going short right there. So, and it's a shame you can't get this nice move down. But if you chase this and try to enter down here, exactly what would happen as soon as you went short, it'd bounce on you. So these will work just enough to keep you trying to take them, and most of the time you'll just get burned on them. But you may enter here. I marked it green, because you do see the 2 legs back, and it's a little more than a measured move. Basically, the measured move is basically to the little high right here, and then it pushed up. And look how far away you are from the EMA. Nice bearish bar. It's been a nice trend down, and we still don't have a new low, so we're still looking for prices to go lower. Again, there's a lower high here. If you had a good signal bar here, you might take that trade. It's still a little iffy too, because it's right in the EMA that we've bounced a couple times already. I'd really like to see it go beneath and come back like here and break higher maybe, but we just didn't get it. And technically that's a failed second entry long, but you can see that that's just one big leg down. So your signal bar is not good enough. Then notice you make a new low, and then you get a first entry, and then you get a second entry, and it's a little bit congestive, and it's like a little break. As long as you got enough room to get out, you can take that trade. And you might take it anyway, because it's a second entry short with the trend, and this has been a really strong trend down so far, and we're not anywhere near the measured move. The first target's right here. So, and then we've got a secondary target even further down. So you may take that trade. You get a lower high here, no signal bar. And you could look at this maybe as a failed second entry long. Notice this first entry, second entry. It doesn't technically fail. And there is a trend, this little brown trend channel. It's like a little spiking channel down. And that's your first break. I'd prefer to see a second entry here. Those are matching highs. That's a relatively bearish bar. So that's another one you could argue to maybe be at least green. But I just think there's going to be better trades. And you see it didn't go far and it bounced. Because we've already got the break and we've got a new low in place. We don't have the measured move yet. But both of these little trend channels have played out. This one hadn't made a new low yet. So you could think about that. We come back right here, that signal bar is just not good enough, and then you're just kind of going sideways. It does bounce down here, and that's another one that you could argue for a possibility, but there is a little bit of a trend down. There's no break outside, but notice it's like a little double test. You're a little ways from the EMA. You're definitely going sideways here, but the trend is down and we don't have a measured move yet. So eventually we're probably going to break on lower. So you're better off to trade these with the trend, which would be the failed breakouts to the upper side, rather than trying to go long in them. When the bias is strongly down and you go into these trading down into them, your bias should be to the downside. So you really want to concentrate on selling versus buying. And there's a couple of chances to buy in here and they would have worked. You really could have argued for a couple of these. You could have definitely argued for that one. So, and maybe even that one right there. But this one's right into the EMA. This one you at least got a little room. So there are possibilities. But then you come up here and you break out. Again, you're better off to wait on the second entry, which comes here. And that bar, you could maybe take that trade right there. I can't remember if it doesn't. It's not the signal bar though. It doesn't make a matching high, so that's part of the problem with it. So in my opinion, you're better off skipping it. And notice you do get a lower high here, and you still got plenty of room down, and you got a trap right there. There's a second entry long, and it fails and turns down. So you could actually go short one tick below that bar, or even wait here if you still got enough room. And you see it runs down there and it bounces at the low. And then you turn down here. Actually, I put that back in the wrong spot. I originally had that brown. I actually meant to get, oh, that was my arrow, so what that was. There's my brown channel there. The two-tiered brown channel. That was my orange arrow showing my next target, but it was just in the way there. It was confusing me. But anyway, failed second entry long trap. Just trade that down. And you actually make a lower high here. But this is the middle of the range. You got to come back short through the EMA. There's a good chance you may go back to the highs. So I'd skip that trade. We do run on down. And notice that new low right there. And you get a first entry, second entry, and it's right off that trend line right there. It actually, again, it breaks higher and turns down. You could have gone short one tick below that bar or even one tick below that one. You get a lower high here, another nice signal bar, and then you get a double test of that high, so it's really a triple high there. Just go short one tick below that. You make a lower high here, but it's right into that low. You don't want to go short down there. Come back here, and now you get a second entry short. Notice that new low, first entry, and that's another reason. That's just a first entry with not much room. And then you get that second entry. Nice bearish bar. Moves on down. There's actually a little trap right there, and you could have traded that one. The only thing is you can see the support there, and you don't have any room. Then it comes back again, but still you don't have any room. It would have worked, but it could have done just like that one and bounce. So you can see we're just in a range, and then finally you get another chance to go short. There's a nice bullish bar there, but it's right back into the high. There's a bearish bar there, and you just don't have enough room, and you see what would have happened to you right there if you tried to take that trade. I don't think you could have scalped out of that one. It's just a little risky, plus look at the congestion. But we come back and break higher and trap people, and it is playing off that brown trend line and this together. So if this bar would have been a little more bearish, that might have been a place to enter. And still, this is a possibility. You could have entered here, just as long as you had enough room. So, but the better trade was when it came back and gave you, notice it made the highs here and it came back once, twice. Plus it's a second entry short. And of course, you're not looking for second entries in this range, but if you get a setup and it's a second entry, it gives it a little credence. So, especially when it's off that brown trend line, plus it's off of this resistance too. It's like a confluence there, and boom, off it goes. This thing really drops down here. Where were we? We were on this one. These look so much alike right here. So yeah, you went right here and look at this thing go. And you could have ridden this all the way down here. And I don't think you want to enter in any of these. You're getting too far away from the EMA. There's a little channel there. But at that point, you don't know that this is in the trend channel line and we're bouncing right off of it. So when we continue to kind of stay below it, then hey, you want to think, well, there's probably something else going on here because it's acting as resistance now. So we really just kind of go back in this range and notice you made that high, you test it once, you test it twice, and it broke higher and turns down. It doesn't go out the other side, but as long as you got enough room to get out, you can trade that as a range. And you've got enough touches there to trust that. Plus it's right off the EMA too, so you got double resistance right there. And this is one you might even think about buying. I didn't mark it. And the reason I didn't was because we had 3 or 4 bars stacking up there before it really formed. So it's a good solid bar, and it would have worked, but I think you're better off to wait and stay with the trend. And you actually get a second entry here. And again, I didn't mark it because it looks like now we're back on here, and this could have been an overshoot, and we might take off the other direction. So I thought it was better to wait on a lower high, but that's another one. You could argue for it to at least be green. But I mean, we're getting so many setups here. You're just better off to wait on the better ones. And you get a lower high here, plenty of room. And you just can scalp out of that one before it reverses. Notice it made a higher low here. And so that one just did work. And really you could have looked at this as a failed second entry long and taken it. And notice right here it even breaks higher again and gives you a lower high, but you just don't have enough room right there. And you don't know that it's going to work out. So just be real careful with that one. And notice we push on through and we come back and test it. And that's a fairly bearish bar, but you don't want to take a short on a breakout unless you get a double test or you know for sure we're going lower and you actually get that right there. And that's a relatively bearish bar. It's never really a good idea to go short at the low of the day, but as bearish as this has been, and with that measured move being on down here, I'd probably take that trade and look at it go, because that's kind of been the MO. Once we break through, each time it really takes off. Notice how we took off there. Break through, we take off. We break through, we take off. We break through, we take off. So the repeat pattern has been that if you can get short off of this, you may get a good move. And there's a lower high here. And this is off a key entry point. And at this point, you have to really assume that this thing is definitely two-tiered here. I don't know what's going on with my mouse. My mouse is acting kind of funny. I get one thing fixed and something else is going on. Just don't know what's interfering with it. And that's one possibility. You might take that right there. I didn't mark it. I'm not going to mark it. But if you took it, you know, it's especially now that we're back in this lower half again, you have to assume that this is two-tiered by this point, and look at it run straight on down to that point. Comes back, and this is actually a second entry short. This is the first break of this channel, so we're probably going to try to test that again. But notice what happens. You're working up, and you get a first entry right there, and then it stops, and then it trades back up, and then it breaks higher right there, and then it turns down and makes that little double bottom right there. If it breaks below that, that's still a second entry. It's not a perfect ideal second entry, but by the rules, it's still a second entry. It's just kind of hard to see. And with that big a move down, and that being the first break of that little channel, you would expect it to go lower. And sure enough, it takes off. And then usually you aren't going to keep creeping down this very long unless the market's really sold off. And so you can expect that we're going to bounce soon, and that's what happens. But again, I don't see any reason to buy this. There is a second entry right there, but that's really not a failure. And there is another new low, and so you could really look at that as a failed second entry when it went higher, but that's too congestive. So I just don't see anything in there that makes it worthwhile. You'd be better off to wait up here and look for a short. But guess what? You get a big bullish bar and you don't get a setup. You do get a lower high right here, but look at that trend line holding. And you're right into the EMA right there. It's the first break of that. So you just don't know what's going to happen yet. I'd sit tight and make sure this is going to continue lower. And see if you don't get a pullback to test this and then get a chance to go short. But guess what? It bounces right there. So guaranteed you're going to get some trap people that took the lower high. And you got enough room back to the trend line, so you may take that trade. It's a short trap, and you can tell it was a good trap by how quick it just shot straight up. It fooled a lot of people, and that's the whole idea behind traps, is they fool people. They fool good traders a lot too. And when you see one, they're quick, easy scalps, and you would have been out of that in just a blink, and then you would have got a runner, and you might have got another 3 or 4 or 5 points right there. So, but I marked it green because you're counter trend trading in a strong trend. And notice this channel keeps working. We finally get a break. Unfortunately, you don't get another chance to go higher right there. And it makes 2 legs up and then a lower high right there. Normally you can't take a lower high with that bullish a bar, but notice that's a new high, first entry. And so there's a second entry long there. So you may trade that as a second entry short, and you're looking for a reason to get back short again. So, and because it's a failed second entry long, we don't care what the signal bar looks like. In fact, if it's bullish, it probably fools more people, and look how it shoots down real quick, and then this thing just is gone. And that's the only real chance you got to enter that. So if you didn't enter there, and notice I marked it green too, it's a little aggressive. You need to know what you're doing, take that trade. You're better off to see if you maybe get a pullback here underneath the EMA, but you just don't get it. You don't get another pullback till right here. That's because all these people that started getting long thinking the bottom was in have to exit again. And we finally get a break here, and we just start working sideways, and then we get a little chance to go short right off the high. You just need room to get out what you got there. Fails out the bottom, fails out the top. You don't really get setups here. These bars are not good enough for a short, and you can't go long right into that. And then you get this big failure out that comes up here. Now you got a bearish bar with plenty of room back to the EMA. And you don't know that it's going to do this, but you're just hoping to get a scalp out of it. And guess what? You get a runner on this one. It runs all the way down and then bounces. And again, I don't think you want to be going long in here. I don't really have any setups on my chart. Anyway, there is one higher low right here, but you've already had your break and new high. Of course, you might get that second leg up, which is what that is. There's leg 1, and then there's leg 2, and it's pretty much a perfect measured move with a little trap right there. So I don't think you want to go long there, but when you get that little trap that breaks higher and basically a double top, it actually breaks higher and turns down, you could go short right there, or if you still got room here, just go short 1 tick below that. And then you got a lower high right here but there was a lot of support across there. I don't have my line on there. So it's just a little, you know, you just have to question what's really happening here. Are we just going sideways and it's breaking out each side, which you can see that, or is the trend establishing itself to the downside? Well, you can't really determine that there. That looks too up down. So you don't want to take a trade if you don't know for sure what prices are doing. If you take a trade, you're gambling. And so I just felt like there's no way to really know what prices are doing there. If you see that on the far right hand side of your chart and you don't see that big move down, well, that looks like a range, and you don't want to be going short right there. Of course, after the fact, it looks real good. So that's what you got to look at it like you would see it in real time, and that's just too much support across there. It looks like a range with a failed break out the top, and now we're getting support at the bottom, and you don't know what's going to happen. So we do get two legs down. If we'd had a good signal bar here, you might go short after on the first break, but you really don't get another setup before we go in the 2 o'clock hour. So anyway, we got that done in 26 minutes, so still below 30 minutes, although I prefer to keep them less than 2. But on a day like this, it's just a long day and a lot of trades there. And there it is from a real high look again. You can see the original blue channel had the break, a new low. We went sideways for about an hour, which is your correction, and then a new trend established and went lower again. And again, you would want to measure this whole. We measured that one. You'd want to measure it. I'd measure this one first. Right there. You'd measure from there. But actually measure this one first to here. Then I would try to measure this whole thing right here and go from there. And that was pretty close as well. But generally your more accurate ones are going to be these shorter term ones, like measure that one and then here, and measure this one and compare it to that one, etc. Like so. As you get more near term, they tend to be more accurate usually. But on a big trend day like this, you won't see them to the tick as much as you will on a more normal day. I mean, this thing was just really selling off hard, and so just about every move was a little bit over exaggerated, including I mean, you see these corrections, and then just the bottom would drop again. So somebody was doing some selling. It looks like what would happen. This is what this looks like. Now, I'm not saying this is what it is, but it's just what it looks like. It looks like that there's some program selling, and then they stop, and it trickles back up, and they make another sale, and it trickles back up, and they make another sale, and then they stop selling, and then boom, they sell again, and they stop selling, because if they sold everything all at once, the whole thing they would hurt themselves. They wouldn't get as good a price because the thing would drop like a rocket. So they don't sell all at one time if they got big orders. And it drops down and they stop selling, it corrects a little bit, and they start selling again. Then looks like they stop selling, and boom, there's a lot of big selling again, and then goes sideways, boom. And notice then you got into the afternoon, and every time it corrected, you'd get some big sales. So it could have been some big institution dumping a lot of stock. Who knows? That's what it looks like, though, to me. So, and that's kind of how the prices will do. But you got your big trend, your break, your new low. We went sideways, and then we got the brown channel working down, break, and we didn't quite get a new low, and we just continued to go sideways. So anyway, I'm going to wrap it up so we don't get much longer here. I'm done for today. We'll be back again tomorrow, wrap up our week, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.